What's up, everyone? Welcome to my channel. My name is Mark. You guys are watching Trading with a Dummy. I have a special guest. He's one of my favorite YouTubers. You guys are going to catch him on my top 5 YouTubers that I recommend people check out when it comes to investing as well as trading. Ladies and gentlemen, introduce yourself, my friend.
What is going on, guys? My name is Ryne Williams. I'm not a trader like Mark here. I am a dividend stock investor, and I am coming to you live from Las Vegas, Nevada. So that's what I got going on, man.
Yeah, did you just move there?
I just moved here. I'm like here officially a week now. Like I'm so fresh here, but I love it so much. Like I should have made this move years ago. It is so nice here. I love living here. So
let me guess, you come from Cali.
Yeah, I come from.
Yep.
I'm from Sacramento, California, that area, and I've lived there my whole life, and just decided, yeah, let's see something different. Let's try something else. And Vegas was the move, and so far, it could not have been a better move. I cannot say enough good things about it.
Honestly, I'm happy for you. I actually left Vegas for a reason.
Oh, really? I think I remember you saying you lived here.
Yeah, I lived in Vegas from 2006 to 2014. And me and my wife ended up moving out to Destin, Florida, and then from Destin, Florida to Orlando. That's where I'm at now. I had to make the move, man. It was I wasn't a fan of Vegas. I was at first. When I first moved out there, it was great, the party scene. I was in my young 20s, so it was very different. But as I got older and I started having kids, I was like, I don't know if I want to raise my kids here. And things were kind of getting really bad at that time. I was living in North Las Vegas. I'm not sure if you're familiar with that area yet or not. And and then I was like, Florida is it. I had a job opportunity, so I took it. And now we're here, and I love it. So we still travel to Vegas quite often. My wife does, at least, because our family's there. So, but I'm glad, man. I'm glad you like it. I'm glad.
Yeah, I'm out here in Summerlin, like near, like somewhere between Spring Valley and Summerlin.
Yep.
And I haven't ventured as far as North Las Vegas. Like I really haven't gone north of the Strip. So I'm still doing some exploring,
Oh, no. Dude, you're good. Summerlin is a very beautiful area, very safe. My oldest son actually still lives in Vegas, and I believe they live in Summerlin. I could be wrong. Okay. Henderson or Summerlin, one or the other. But those are the 2 spots that you definitely want to live at. So, yeah, man, congrats on the move. And obviously you have a nice house, brand new house?
Well, I'm in an apartment, so we're just renting this first year. And, we'll see how we like it. But if this time next year we like it as much as we do right now, then yeah, I would definitely consider buying. But at the same time, I want to see what the market's looking like next year. And both the real estate market and the stock market is just going to be to kind of segue, it's just going to be so interesting to see what happens over the course of the coming months and really this next year on the market. It's wild, man. It's a wild
absolutely.
West right now.
Yeah, absolutely. Especially the housing market, because we bought our first house in Vegas. You won't believe this is like true story. It's crazy. The housing market in 2008 was pretty high, but then we had the crash that happened, right? So this whole neighborhood in North Las Vegas was brand new, relatively like 2 years old. Most homes were 500,000 and up, and they had a whole bunch of foreclosures. Me and my wife, we got this huge ass house, man. It was like 3,200 square foot for $172,000. And I regret selling it, man. That's like the one house that I regret selling, because now it's going for like, I think about 500,000 again. So it's pretty crazy. It was a good investment. We should have kept it. Now my wife's mom, she lived in this apartment down the street from us. They were selling each condo for $50,000 at that time. So everything was a steal. So I'm hoping obviously for you too, because if you want to buy out there, I'm hoping that the market definitely comes down somewhat, and that way you can definitely purchase a house when you get a chance here. So tell me a little bit about your background, man. Like, what do you do for a living? Because I'm sure it's not just dividend or an investing, right? Are you like a photographer or something?
Well, so at this point in time, actually, just kind of in this transition to the, in this move, I'm actually just creating content full time for the whole month of September. It was my first month just full time doing this and nothing else. And I'm kind of at a weird point where, and I won't make it a long fable or anything, but I'm kind of at a weird point where I'm trying to decide like what I want to do, because I'm making enough from creating content, and I'm not touching my dividends obviously, but I'm making enough from doing this where I can fortunately like pay my bills at least and have all my expenses covered. But that still doesn't leave me much of a safety net to continue saving, and that's something that's important to me. So I'm in a really interesting spot where I'm trying to decide, should I just keep going down this route, keep doing it full time, or should I just keep doing this, but then get something a little extra on top, maybe like a kind of a dick around job. I can't think of a better term for it, but just something low key, something casual to bring in a little bit more income to supplement what I'm doing, creating these videos and creating content. Or I just go get a full-time job and continue doing this on the side. I don't know. I'm in a really weird spot. But prior to this, basically prior to September, I was working in digital marketing and basically helping businesses back in Sacramento manage their social media accounts. But yeah, man. So like I said, I'm kind of in a weird spot. I think I'll have some sort of more concrete direction by the end of this month in terms of what I'll do. But it's interesting.
Yeah, that makes sense. That's why your videos are so good. You're in,
Thanks,
in
man.
digital marketing. Yeah, because the editing, like for example, it takes me, man, a long time to edit my videos. About how long does it take you to edit a video? Because you seem to drop pretty consistently with about 3 to 4 videos a week, it seems like.
I do 2 like recorded videos, and then I'll do like a live stream every Friday, which is so much fun. I love doing the live streams. I love doing this. But I would say the recorded videos, just editing probably takes between 2 to 3.5 hours, just depending on the video. Like there's some videos that I have recurring every single month. Like every month I'll put out a video where I talk about how much dividend income I received, or like today I put out like a full portfolio update video. I'll have videos like that I do every month, and it's a little bit easier to edit those because it's more templated. But then some of the other one-off ones that I'll do throughout the month, man, those can take me between 3 to 4 hours, 3 to 3.5 on average usually. So it's not nothing,
Oh, okay. Yeah, so I'm definitely slow, like really slow then, because it takes me a minute to edit stuff. I also dropped a video this morning, and that took me about 8-9 hours to edit. But it's back and forth. I got kids too, so it's really busy. And I have people staying with me since the hurricane just went through. They lost electricity and stuff, so they're staying with us as well right now. So yeah, so your content is definitely fire. I love it. I want to talk a little bit about how you end up getting into investing, because from what I recall watching your videos, you said you started back in 2019, right? So you started like a year prior to me.
Like I started seriously investing like on my own for myself and taking it into my own hands probably sometime towards the middle to end of 2019. I don't know exactly when, but somewhere in there. But prior to that, like I was still investing, but I mean, I don't even know if you really count it. So my my parents fortunately exposed me to a lot of this stuff growing up. They're big into investing, real estate, and stocks. And so when I was probably 12 or 13, my dad created a custodian account for me. You know what those are?
Yes.
Yeah.
Where they basically put it in every month a little bit, and then once you get a certain age, then it goes over to you.
Yeah, basically it's a stock account managed by my folks. And it was kind of funny. They made ones for myself and all of my siblings. And it was kind of funny from then on out. Every birthday, every Christmas, every time there was like some sort of gift that needs to be given, it wasn't something that like a teenager would want or a kid would want. It was money for Charles Schwab. It was money to put in stocks, and it was kind of a running joke in our family. Being 12, 13 years old, getting money to put in stocks. It's like, what am I going to do with this? Okay, thanks, Dad. But it was funny too, because like they'd always say like, one day, like you're gonna thank us. Like one day you'll realize this is a really cool thing. And it didn't hit me till I was about 25 or 26, which was a couple years ago, back in 2019. It really didn't hit me until then. And that's when I decided to kind of start taking it serious. And at that time in my Charles Schwab portfolio, which is the same portfolio I have today, I probably had like $7,000 in there just saved up across the last, however many years, from birthday money or Christmas money to go to Charles Schwab. And then I'd started a little Robinhood portfolio on my own. That was kind of like my first venture doing something for myself. I don't know why I did it on Robinhood, but
we all did.
Maybe just watch too much YouTube. But I just kind of started building that myself. And then when I first started with that, dude, I was buying things like one of the ARK ETFs, and I was buying stocks like Dropbox or Beyond Meat, things that I really didn't know too much about. And at a certain point, I stumbled upon dividend investing, and I was kind of familiar with what dividends were, maybe didn't fully grasp it, but I don't know. I decided I wanted to get deeper into investing, so I wanted to learn more about it, and somehow just kind of got deep into dividends. And it really started to click with me, and probably sometime towards probably year after I first started, towards the end of 2020 or going into 2021, even not too long ago, I was like, you know what, dividends are for me. Like I can tell, like, just my temperament and my personality, this is the style of investing that really resonates with me. So I went all in on dividend investing, which I understand is not for everyone, but it certainly works well for me, and I love doing it, and that's what I've been doing ever since. And I really love doing this, and that's what made me want to start making videos about it. You know what I mean?
Yeah, I definitely get the dividend as not like for everybody, because I think sometimes there's like this false impression. At least the first time I got exposed to really taking this serious was also through dividends. Initially, it was back in 2020. There was a social media personality guy who was always talking about dividend stocks, and like, you get passive income and everything. And I, just like you, I had an account prior with just a couple stocks in or something. I didn't take it too serious. But then I started buying, AT&T, stuff like that. But I didn't realize that you actually need a lot of money to have a consistent income to live off of it, right? You need to, it's a process, and you need to build it up. And obviously during 2020, everything was running. So when you look at dividend versus, all these growth stocks that you were talking about, everything was skyrocketing. It was like, oh, I'd rather just pivot that way. Now, since you mentioned that you did buy some of these growth stocks, which like Beyond Meat, Dropbox, all terrible companies, of course, looking back, like now they're not good. But did you make money off of them? Did you exit, or did you end up holding
No,
the bag?
I mean, I exited. And I think I've made videos on this in the past. Like when I first started making videos, I was kind of half in growth, half in dividends. And man, I won some, I lost some. I think I lost some money on Beyond Meat. I don't remember exactly how much. I lost some money on Virgin Galactic.
Oh yeah, that one.
I actually made a little money on Dropbox, I think. But one stock that I really made a considerable amount of money, and this is probably the biggest gain I've ever received on a stock, is CRISPR Therapeutics. Do you know that company? Do you know
Absolutely,
that stock?
I do. Yes.
Yeah, and I bought
It's an
that stock.
ARKK. I think it's an ARKK.
I made some money
as well.
on that too. But CRISPR, man, I probably bought that back in 2015 or 2016, just with birthday money, whatever. Didn't know what I was doing, but I heard about it. I heard Joe Rogan talking about it, and he kept talking about it. I was like, that sounds kind of like a cool thing. Maybe I'll see, I'll see what it's all about. And I found it was a stock. And I ended up making probably, this isn't, I guess, a whole lot, but for me it was like a 200 to 220% return just on that one, which.
And that's just stocks, not options or anything. That's you just buying the stock.
That's just going long on
Nice.
CRISPR.
No, that's good.
So that was probably my best return. But like I said, I lost some money on some. I won some money. But overall, thank goodness I was up.
Yeah, yeah. I made the mistake of holding the bag with a lot of these companies. I did a lot of options in 2020 once I discovered how it works. Made a lot of money off our ARKK, and that's also what killed my portfolio. So same one. I mean, it did great, and then I got back into it again, and then it's just been a steady decline since. Not doing that stuff as much anymore. But is there anybody specifically that you were watching or that you learned about dividends from? Is there like any resources you recommend?
Sure, man. There's a few. When I first started, there were probably 3 specific channels that I really felt like I learned a lot from, and they've changed over the years. You know how it goes. Like creators, they'll kind of switch directions as time goes on. But one channel that I think a lot of people would be familiar with is Andre Jick. He used to talk about dividends all the time.
Yes, yeah.
Not so much anymore, but man, he was deep into dividends.
He was
for a
big,
while,
yeah.
I really learned a lot from watching him. Another just OG dividend investing creator, PPC Ian. Do you know him?
I do not. Never heard of that one.
Check out his channel. He's one of the OGs, probably one of the first people to talk about dividend investing on YouTube. And I still watch him. I love him. PPC Ian, that's another one. And then there's another channel, and I still watch him. I really like this guy. The Dream Green Show. Have you heard of his channel?
No, I haven't heard of that one either. So you're exposing me to a bunch of new stuff now.
Yeah, I'm surprised more people haven't heard of Dream Green, but definitely check that one out. My man Zeke over there. So I learned a lot from those 3 channels specifically. And then my good friend Russ, Dapper Dividends. I was watching him before I was making videos, and I learned a lot from him. And it's been cool because we've become friends, which is funny. But yeah, man. So there's just a lot of good channels out there. YouTube's a really good resource to learn about all this stuff, obviously, but it's also, and this is the same for my channel, like you got to take it with a grain of salt,
Yeah,
Everything we talk about here, it's a great place to start, but it's a great place to like dip your toe into this stock stuff and learn some surface level stuff. But to really
hmm
get into it, like you gotta do your own evaluation for sure.
yeah, absolutely. Because it is. I mean, it's twofold, right? It's like a curse and a blessing at the same time. You can learn so much information on YouTube, but then you also have a lot of liars on YouTube as well.
Yeah.
And that's why, honestly, I really like your channel. You're very transparent. You show how much money you invested. You're not hiding anything. You put it all out there. You cover it every single month, like what you buy, what you're buying, what you're not buying. What I did notice is that you buy fractional shares through Charles
hmm
Schwab and Fidelity, right? Do you use Fidelity as well,
No,
right?
man,
Was
just
that
Charles Schwab.
okay?
Yeah,
Just Charles
I have
Schwab. Okay.
a Roth IRA on M1 Finance, but that's like totally passive. I don't even think about that portfolio. It's just automated. But Charles Schwab is my bread and butter.
Yeah. Is there a reason why you like fractional shares?
Just because I don't have, I'm not balling, so I can't put in large positions at a time, and so I dollar cost average every single week.
Hmm.
Every week, I'll invest $150 into my portfolio, um, and I don't always buy fractional shares. Like there's Charles Schwab won't let you buy fractional shares of some companies. Like there's one in particular that I just started buying, KRC,
Hmm.
Kilroy Realty Corporation, and I can't buy fractional shares of those. So every single week I'll buy like one or two full shares of that. But then as the rest, like if I've got like $100 left over, I'll just divvy it up, split it equally between a couple other companies in my portfolio, like maybe Lowe's, or I'll buy some Intel, and it works out to be fractional. But I don't know. I just see it as doing what I can, and I mean, some percentage of a share is better than none.
Correct. Yeah.
That's
Yeah.
how
One
I
hundred
think
percent. So
about it.
I don't get me wrong. I'm not knocking it or anything. I'm just wondering because I know like, I'm in TD Ameritrade and E Trade. Those are the two accounts that I have, and I don't think you can buy fractional shares at all. And that's the reason why I was asking. I saw your again. I watch your videos and stuff. I'm like, oh, he's buying fractional shares. It's actually kind of smart because I'm kind of forced to have to stack up. Like for example, the other day I put another $1,000 in my Roth, and
Yeah.
I could only buy certain shares. I couldn't do fractional, even though I wanted to. I couldn't. I just had to buy this, and I have some leftover like $300 is sitting there now, and I have to wait until I get enough to buy the other indexes that I'm interested in. I think it's just it's a smart move doing the fractional shares. I wish. I mean, I could be wrong. Maybe there is a way to do it on TD Ameritrade and E Trade. I'm just not aware of.
Yeah.
But I know Fidelity through my job they have fractional shares. So I was thinking about actually trying to put some more money in there and then try to do the same thing what you're doing every week.
Yeah.
Depositing money because that's easy. That's to me that's a lot easier than having to wait for a drop or being forced to buy a single share that could be like $400 or $500 a share.
Yeah. And I think at a certain point too, it comes down to preference. Like I like doing this. I like buying every week because it keeps me disciplined. It keeps me consistent. And it also, to your point, it makes it so you're not relying as much on the movement of the stock market. You just know every single week I'm buying more stocks, whether it's up or down, and over time, it's over a long period of time, it'll work out fine, or it should. But then again, like there's other people like Warren Buffett, like he's not buying every week. He'll sit on cash and wait for the right opportunity,
Yep.
and then reel something in and make a big purchase. And I'm sure that's the natural progression. Like as you make more money doing this and have more money to invest, I'm sure that that's naturally how it goes. And I'm looking forward to seeing if that's the case. But it's going to take some time to get there. But yeah, and I know too. I don't really know what the argument is against fractional shares, if there even is one. But I do know that some people are just it's just mentally they can't wrap their head around it. They don't want to do it. They don't like seeing 3.267 shares. Like it's got to be the whole
Yes.
number. You
Yeah, yeah,
know?
yeah. No, I've seen some arguments on that actually, and I completely disagree. My financial advisor he took over my old Roth that I had, and when I go in there, it's also fractional shares, and I was like, okay, that's fine. I mean, whatever works for them. I don't see why people are against it. The arguments that I have seen is just like, well, would you go to Burger King and only take one bite of a burger or something like that? I'm like, that's a stupid argument. It doesn't really matter. If you, in the end of the day, you're investing money and it will eventually compound. It may be a slower process, but it's a compound effect. That's what you're doing. You're building up your portfolio. So I totally get it. I think it's very impressive that like your family was doing that with you and your siblings. How many siblings do you have, by the way?
I've got a big family. I've got three brothers and a sister.
and they were just every single holiday and every single birthday to just like putting money in the account. That's so smart, man. I did that with my kids as well. My son has a Robinhood because we all started at Robinhood at one point or another. We had it, right? So I just passed it on to him. I was like, here, you can play with this. And he bought, I think, like Nike, Roblox, and Walmart and Target. That's all he's really been investing in, but he hasn't been doing his chores, so he hasn't been getting a lot of money recently. But to me, that's definitely a good way to introduce your children to financial literacy and the stock market. And I think a lot of parents should start doing that. My parents never did that. My parents never even spoke to me about finances growing up. But it sounds like in your household, that was kind of a thing, right?
Absolutely. And, like I said, as a kid, we didn't really understand it, but in hindsight, man, it's been a huge blessing. And I know someday when I have kids, I'll likely take a very similar approach because it's such an important thing. Financial literacy, to your point, is something that's it's just not taught enough. They don't teach it in schools, and
Correct.
some people think that's by design. Other people maybe think that there's just more important things to learn about. But man, think about how many people are struggling out there financially, and it's not as hard as you think to get ahead. It's as simple as investing $5 a week or $20 a week, whatever you can do, and just it's better than nothing. And over time, that can grow to be something probably larger than you'd imagine, but it takes time and it takes that consistency. And like I said, it's better than nothing. And I feel so fortunate to be able to. I feel so fortunate to have been exposed to that. And I definitely think it's. Man, and if you think about it, it's really changed the trajectory of my entire life. I would not have started this YouTube channel, and I wouldn't be doing what I'm doing today if I wasn't exposed to that as a kid. And I don't take that for granted, or I try not to.
Yeah, speaking of your YouTube channel, so you were in digital marketing. That's what you were doing for a living prior to moving out to Vegas. Why not start a YouTube channel on digital marketing? What made you decide, you know what, I'm going to do this dividend and stock route?
I'm just not that smart. I don't know why I didn't think about it, but yeah, you're right. Like that would have been such a natural thing to do. And I think, to be honest with you, I think I just like doing this more. I like talking about this, and I think I'm able to make a much more positive impact doing this because, like I said, like no one's talking about this stuff, and it's such an important thing. And at some point, like everyone, unless you want to work until you die, which no one wants to do, like you're going to have to start investing. You're going to have to do something. And man, and I'm sure you get this too, Mark, like there's been people who have emailed me, or it doesn't happen all the time, but God, it's the best thing, who've emailed me or reached out to me in some capacity and said, man, I just watched one of your videos and I started dividend investing. And that's the coolest thing. It doesn't even have to be dividend investing, like just investing in general.
Just investing, period, yeah.
It's the coolest thing though, because just from seeing what I'm doing here, seeing what you're doing here, they're making a decision that 10, 20, 30 years down the road is going to change their life. And I think about that and I just like, man, that's such a cool thing. It just is so rewarding. And so, to make a long story short, I just feel like it's making a much more positive impact to talk about this stuff than talking about digital marketing. And I'm so much more interested in this stuff. I love doing this.
Yeah. And it also has more of a, like you said, long-term effect, for your life moving forward and stuff. Because best believe, like, had I been into this when I was in my early 20s in Vegas, I would have probably been better off. I probably could have retired a lot earlier than what I did initially. So I was too busy at Spearmint Rhino. So are you familiar with that place yet? I'm sure you drove by it. Okay.
I know what the Spearmint Rhino is. Yeah.
Yeah. So it was crazy times, man. I had a good time in Vegas from the beginning, but then like honestly looking back, it's just I spent so much money doing all the dumb stuff in Vegas that I do sometimes look back. I'm like, man, I could have used all that money invested. I would have been better off because, as you know
what, man, like you turned out just fine. Like you,
absolutely,
you're in the right direction and you're doing great. So hey,
yeah, absolutely. Now I will say this, and this is and you probably witnessed this as well because you and I started our channels around the same time, you a little bit earlier. Have you seen somewhat of a decline in interest in stock market with viewership?
Yeah,
have you noticed that? Yeah,
I have. Like, and it's totally dependent on what's going on in the market. And I haven't exactly figured out which one it is. I haven't exactly figured out if more people are interested as the market's going up or if more people get interested as the market's going down. I would imagine it's the former, but I'm not sure. But yeah, I've noticed that viewership changes. A lot of things change just depending on what's going on in the market, and what are you going to do? And that's just where consistency comes into play, and that's why I like just being able to talk about what I'm doing, because it is kind of, I don't know, it's just having some sort of consistency is helpful in those ways, because it's easy to get discouraged when it's like your videos aren't doing good, but there's so many external factors that might not be related to your actual content or you as a creator, like the market, like what's going on in the market. And
yeah, because
what
I noticed,
keeping on.
Yeah, what I noticed is when, like in 2020, there's a huge interest in the stock market. Obviously, viewership was pretty good. Where I noticed it started kind of dropping was during the basically not the crash yet, but the downturn. Once we started selling off, I noticed that the was the RPM, like it shows you like how much people are paying you for your ads, and it decreased. And I was like, oh, it's decreasing because there's not that much interest in it anymore. Retail investors are getting out of the market now because, like myself, I mean, I'm going to start sharing my portfolio here soon, but it's ugly. I mean, like my individual, I'm not gonna, my Roth and stuff, that's all good, but my individual like shares, I can combine them all, and it's ugly. And it's stuff that I bought from 2020 till now. And you look at it and it's like, I'm down. Like most people are down if they bought within the last 2 years and they held the bag. They're down significantly. So I can see how that's somewhat discouraging to people. And that's why I try to, like the video I dropped earlier today, I talk about it. I'm like, maybe you guys should just start investing into just the S&P or doing dividends. And speaking of dividends, since you are a dividend guy, I'm invested in one of these. I'm not going to tell. Well, I will. VIG. Is there a reason why you don't? Are you familiar with VIG at all?
It's one of the Vanguard ETFs. I know that. Right?
Correct. Yeah, it's one of the Vanguard ETFs that's specifically for dividends. So you get dividend return and everything. So that's the way how I have exposure to dividends. I invest every single month in VIG, and I was wondering, like, is there a reason why you don't go that route? Because I know you have a lot of shares, right? You get out, you find companies that you're interested in, and then you buy fractional shares here and there. Why wouldn't you just do the ETF and just compound on that?
That's such a good question. So I do that in my Roth IRA. My Roth IRA is all ETFs, like VOO, VOO, SCHD, and then I have like the 3 other Vanguard ETFs. And so I do that, and I'm happy that that's a more passive approach. But I've really come to like learning about individual companies and learning how to read financial statements and thinking about like what, and this is a constant work in progress, by the way, but trying to think about like what makes a company good, or what makes a company great, or I guess trying to analyze these individual companies and maybe what their place in the world looks like today, and trying to think about what it might look like 5 years from now, or 10 years from now, or however many years down the road. I like thinking about this stuff. And, there's certainly some more risk involved, and it's a bit more active than just buying ETFs, like you said. But I enjoy it. And I like being able to cherry pick the companies that I invest in. I like being able to custom build my portfolio. And this might be a weird analogy, but like I remember growing up, I was a big gamer growing up, and I used to play like the Tony Hawk games were always my favorite.
Oh yeah.
And a few of them in, you can start creating your own character, right? Or even The Sims. That's probably a good game that we could talk about here. But dude, I would spend more time just customizing my character, like than actually playing the game. And so I don't know. I've always liked just being able to tweak things and make things the way that I want them, and fit it to my exact liking. And obviously, you can't do that as much with ETFs. And so I think that's one of the reasons that I opt towards individual companies. I also am getting a better return, at least today. I'm getting a better income return and income growth with my mix of individual companies that I otherwise would if I was just in ETFs. And that's just today, and that could change as time goes on. But and I know this is a very roundabout way to answer the question, but those things combined are probably why I opt towards buying individual companies. And I've got like 23 different stocks right now, so I'm still pretty diverse, pretty well diversified. And I think I'm also I like that I have that passive Roth IRA with
Yeah.
those ETFs to kind of, kind of as a sort of safety net
Yeah, you
for
just
the long
basically put
term.
money in there,
So
you leave it, you don't have nothing to worry about. So and now I totally get it because same thing. I was because I'm in this phase now. I'm trying to figure out what I'm going to do with that portfolio that I have because the one I'm going to share, I want to try to fix it publicly, right?
mhm.
And but I did come to the conclusion, like, man, had I just invested maybe just the S&P 500, I wouldn't have the massive gains, but my downside would have been less, right? Because the S&P we're down 20 some percent now. I got some shares that are down like 50, 60% because I just didn't pull the plug. So I know it can sometimes be dangerous just buying individual shares. So that's why my Roth, I was always very conservative and I only had ETFs in there or like Apple and Microsoft. That was basically it. And I was doing pretty well in that area. The reason why I was just asking you, like, why not just shift to the VIG? Because I just want to just curious on like what your thoughts are. It makes sense what you're saying though, because again, you're interested in the stock market like me, right? So you enjoy doing the research, finding these companies. Oh, this is interesting. I never heard of this company. And you look in a little bit deeper and you're like, do I like this? Do I not like this? Let me buy a little bit and see how it does. So I totally get it. Because I did that for a while too. Like I don't know if you own these two. One of them is Genuine Car Parts,
Hmm.
GPC. Have you heard of that
I've heard
one?
of it. I don't own it, but I've heard of it.
Yeah, so I had that for a while, and then SBLK, which is a shipping company. That one,
Huh.
it's very volatile because I mean the dividend's like 26%.
Dang.
So it was one of those, and I got out at the perfect timing, and I was really like I had a lot of shares, and I was buying it, and I would reap the benefits, and I literally got out was it like maybe 2 months ago, and then the company just completely collapsed. Like it just went from I think it was like $34 to I think it's like $17 now. It just completely dropped, which I knew was going to
Did they
happen.
cut the dividend and stuff as well?
No, I think there was some supply chain issues or something like that happened. I don't think they cut the dividend because I honestly I think the dividend is even higher. But as you know, with those higher dividends, right, there's a lot riskier. I think you've mentioned in one of your videos as well. Because again, like I like for anybody who's interested in like dividends, literally, you guys should be following this guy. Like you're you talk about the stocks, you talk about your portfolio. Like I love it. Like to me, like your channel is one of the best dividend channels I've seen, and
Dude,
and it
thank you
really
so
is. But
much.
those high yielding dividends, people think it's always like a good thing to have, and it's not necessarily, right? Could you agree with
Dude,
that?
those yield traps, man. And that term doesn't just apply to the stock market either. Like there's yield traps in other areas of life as well. So, a lot of the things you learn investing can carry over into other aspects of your life, which I think is another reason I like
Hmm.
doing this. But yeah, man, you got to watch out for those yield traps. Those high yields, they're sexy, they look good, they're tempting, but they can often burn you and leave you high and dry, and you don't want
Exactly.
that.
Exactly. That's what happened like with the growth stocks, for example, right? So a lot of those ones they looked sexy and they were riding up to the sky, and now look at them. A lot of them are like below $10. So
Yeah.
it happens. It happens on that journey. Now, is there like a specific time frame you're planning on continuing to invest in your dividend portfolio? Are you just trying to compound it for a certain amount of time before you exit? Do you even exit at all? Do you sell any shares or stocks within your
Yeah, I
portfolio at
mean,
all?
theoretically, you're supposed to buy and hold them forever, right?
Hmm.
But there's a few, like admittedly, there's a few stocks in my portfolio that I don't see myself holding for a long time. Um, Ones that are, I guess, higher yielding, that the dividend growth isn't really there. They could be potentially yield traps, TBD. We'll see what happens. But there's a few stocks that I can probably let go of at some point. But they're doing fine for now, so I'm going to hold on to them. But yeah, I mean, ideally, like when you buy these companies, right? Like you're buying to hold them for decades, if not
Hmm.
for forever. And that's why a lot of dividend investors look to companies like Coca-Cola or
Hmm.
Microsoft or Apple, which their growth, but they pay a dividend, um, or Procter and Gamble or Lowe's or Home Depot or Pepsi, you name it. Like these legendary companies that are gonna be around that have been around for a long time and are gonna be around for a lot longer time. Because
Yeah.
it's just there's some risk with individual companies, but if you're buying ones like those that you can pretty much be rest assured that they're going to be around decades down the road, your money's in pretty good hands.
Yeah.
So
Are you looking? So when you look for a company that you're interested in, If they don't have a dividend, they're automatically excluded from your portfolio.
Yeah, I mean, for better or for worse, man. And that's probably not the best strategy. That's how I'm rolling though. There's a few companies though that I'm like, if I decide to loosen up that criteria a little bit, there's a few companies like Google or Spotify that I'm just really big, users of and customers of, and obviously being a YouTuber, Google's a big company. But there's a few companies like that that's like, yeah, if I decide to change my mind at all down the road, I wouldn't mind having some like those, some like that, I should say actually. But yeah,
Yeah,
that's
I
kind of where
just
I'm at
bought
with it.
Google recently. Did you buy it
Okay.
recently on this drop? Did
No,
you?
no.
You're
Is
waiting.
now a good time to buy Google? I haven't looked at
Um,
it, but
it's like hovering around 98 to $100 right now. So I entered at 100. My next buy orders are at 85. So
okay.
I definitely think we're gonna get there. That's just me. Um, I'm because I just started doing this like 2 years ago and really being heavy into investing. I'm in a little bit of a unique situation. So I'm kind of I think that's why some people like my channel, because I'm relatable, because a lot of people got into the market 2 years ago.
Hmm.
So when they're feeling the pain of, man, I thought long-term investing is supposed to be easy, but my account's down. I'm the same way. Whereas had you invested 10 years ago, this doesn't bother you. The 30% drop or 20% drop that's been happening, it doesn't bother you because you've been investing for 10 years. So it's whatever. Your portfolio is down a little bit, no big deal. But when you're brand new to this, 2-3 years in, it hurts, which is also why I'm extremely, extremely surprised. Dude, you are beating the market. Congratulations. I saw
Barely,
that
man, and
video.
that's
Now
that's
don't roll your
just
eyes,
that's just
dude.
for
That
now. That's
no,
just for now,
you
man.
you are beating the market, and we only have what, a couple more months. You are
Yeah.
beating the market what, by 10%? You said, right? I think
No, I'm
you're up
so
10%. I thought no.
across the last 3 years, the S&P has, I think I'm not going to get this number exactly right, but the S&P has gained on an annual basis about 8.8%, I think.
Hmm.
According to the screenshot that I had in my video, which was data from Charles Schwab. But then my portfolio was somewhere between 9.5 to 9.6% across the same period of time. So I'm only beating the market in the last 3 years by about 0.7% per year. And that's just in the last 3 years. That's really, really the period of time that I've been consistently investing. And I think that includes dividends as well. I think that's total return, not exactly market return. But it's, it is what
Yes,
it
it's
is.
still
It's still
good. But as
technically
of
beating
this
it.
year,
So.
though, like year to date, though, you're at 10%, right?
Oh, yes. Oh,
Yeah.
I'm
So
sorry. I misunderstood you. Yes, year
yeah,
to date, the S&P is down about 22 point something percent, and my
and you are
portfolio is
up
down
10%.
about 10 and a half. So yeah, we're beating the market by quite a
Yeah.
bit this year.
No,
So
that's
that's
awesome,
good.
man. You definitely took a good route, honestly. Like watching your video, like the dedication you put into it, and just finding, hey, this is my route. I like this conservative manner. Dollar cost averaging, finding stocks I'm interested in, and just putting it in. I like it. That's why I
Thanks,
want to
man.
recommend your channel to my audience, because I know, for one, like I do both trading and investing, right? But I haven't really been doing much trading recently. Trading is like obviously way harder. Investing is a lot easier. When it comes to investing, though, the biggest part is just the FOMO and the
Yeah.
fear that you have to control, in my opinion. Because people will sell out of things. I sold out of all my Apple, not because of fear. I'm familiar with Apple is going to go down to probably 120.
Oh, I
130
hope
is the
so.
next level.
I hope
Yeah,
so, man.
130 is the next level. I think we're gonna reach 120, and that's why I'll
Yeah.
buy again. So I'm not like, that's the only reason I sold Apple. But usually I keep all my stuff. Some companies I did sell out, like Shopify. I did a whole video on that. I think I forgot. I don't even know why I was buying it. I think it was
They
a
really
trade.
plummeted, didn't they?
They did. So I was trading it initially in 2020 when it was like before the split. They were like $1,400 or something a share. It was crazy. So I was trading it during that time. Then they did a split, and I was trading it, but I think I bought it in June. I bought it for a swing, and I think I forgot. So because I was in the military and I deal with
Okay.
PTSD. So sometimes I have like memory lapses.
Oh,
Sometimes my memory's off a bit, and so once I combine all these stocks, I'm like, oh, Shopify. Oh, it dipped today 10%. I'm gonna buy more. So I kept buying Shopify, and then the other day, it was like last week, I was looking through all the stocks because I was trying to make notes on like why I bought each individual stock. Someone was going to talk about it in my YouTube video, and I was like, Shopify. Why am I buying Shopify every single time it dips? Then looked at the data, I looked at the books, I looked at the statements. I'm like, this is a terrible company. They're losing money left and right. Like, what's going on? Why? I sold them all. I took a little loss. I was like, look, I'm going to sell it because I looked at the levels. and it's going to drop probably significantly more. It should probably be evaluated around $15 a share versus where it's at, which is at $29. But they already dropped. I mean, at this point, like 50%, I think, 45, 50%. That's when I started buying. But I guess I was trying to get it for a swing, buy it low, and then sell it. And I just forgot, and I thought I was investing into it, so I kept buying shares. But I like the one that you were talking about, Spotify. I like Spotify. I actually bought Spotify the day Joe Rogan signed the contract initially with Spotify, and it ran up like crazy. I sold at 180 and 200. So I bought it at, I think it was $90.
Good for you.
And now, I mean, look where it's at now, though. It's like, I think below $90 again. I think it's in the 80s right now. It's good company, definitely good company, but everything was overvalued back then, looking back now, you know? And
so are you just kind of sitting on, not completely, but with some of these stocks like the Spotifys or the Shopifys, and there's one stock I want to ask you about too in a second, but are you just kind of sitting on the sidelines waiting to see how much more the share prices will drop before starting new positions in them or getting back into them? Because I'm with you. Like, I don't think this is it for the red. I think I don't want to make it political, but I do think we'll see some more hurt after midterms.
Yes.
Yeah,
No, I agree with you. No. Yeah.
So are you just kind of
cash.
waiting till? Okay.
I'm cash heavy. So I'm cash heavy. But I have been buying into the S&P 500, the VIG, like I told you about, the Vanguard. I have QQQ that I buy every single month as well. So I just started those positions in my new Roth back in June. When the market completely, remember when like everyone thought it was like the bottom and a bounce, and I was like, I don't think it's a bottom, but just in case, let me scale in a little bit. So I've been nibbling here and there. So every time I see like a company I'm interested in, I had a board literally full of like 30 or 40 stocks of companies that I researched that I liked on my board. Neighbor's kid came over, every babysitting, and then just wiped it all off. So I gotta start over. No, man. I was looking at my son. I was like, dude, you're supposed to be watching him. He was like, I kept telling him not to wipe it, but he's kept wiping it. I'm sorry. We tried to fix it. It's like, but you're not even, you guys are like riding Barbie and stuff. Like, what are you talking about? It's not what was on my list. But I have a list of stocks, and so what I have right now, I could tell you, because by the time this interview drops, I'll probably already have shown my portfolio. So I have 3 stocks that I bought back in like 2020 through now that are just significantly down. Roblox, I'm down 49%. Facebook, I'm down 50%. The worst one is Square. Square and Facebook hold majority of those individual portfolios that I had. That when I combine them, those are the 2 biggest holdings, and those are the ones that are down the most. I regret Square.
I'm surprised to hear that Square is down so much.
Yeah, it's not what. Again, I was new to the game. I was just following people on YouTube, and I was part of this group, and they're like, Square's new JP Morgan. It's like, and I long story short, I actually bought Square with my very first investment into the stock market years ago, before I was really into it, was Square. I remember having the app, and I was like, oh, I like this as a stock. It was $20. I bought it, and I sold it at 120. So I was like, that's a pretty good return. And I sold that in, I think it was 2020. So, it skyrocketed, it started coming down, and they're like, a good level to buy Square is 190. So got to 190 and I bought. And then he's like, 175 is the next level. That's a good level to buy. Like, it's not going to go lower. That's what this group was saying. So I bought at 175. And it was like 150. I was like, how are you getting these price targets? Because that was my question. Like, how are you getting these price targets? And they wouldn't tell you, right? That's the scary part to it. They wouldn't tell you how they get the price targets. Well, I later learned, once I started doing technical analysis and stuff, there's levels. It was just supply and demand zones. So then I plotted all the supply and demand zones for Square, and like, no shit, it literally hit every single one of those levels that I had. But I stopped buying at 150, and I jokingly, and I posted this on my Instagram months ago, I was like, when Square gets to $80, we're going to be in hell. I didn't really think it was going to go to $80. It's at $55 now. So you can imagine, like, I'm down significantly. Like, Square is probably the one that I do regret, because I think they're going to have a very hard time getting back to where I bought it at. So now I'm in this position where, do I take an L and sell and lose thousands of dollars, or just hold on to it for a couple of years and maybe it might come back, and we'll see, because it's all about patience, right? We never know where it can lead to. Facebook, I'm not so worried. I think they'll come back. I know a lot of people don't think so. The direction they're going with the metaverse and stuff. I know it's going to take some time, but I'm not too worried where I'm at. I honestly probably going to start dollar cost averaging down on it once it gets to $100, like 120, 100. I'm going to start buying again. But everything else that I got, it was pretty much June timeframe. I got Berkshire Hathaway, I got Microsoft, I had Apple, but I sold all of those. I had that for a while though, so I took a profit on that. Shopify, which I sold out of. I had Match.com, believe it or not. Took a small L on that. I wasn't trying to sell it. I was trying to set up a stop limit, and I accidentally sold it. But it worked out because the next day it dropped 10%. So I was like, oh, I really got lucky with that one. Could have been a bigger loss. And I think I had AT&T. I saw that you're a fan of AT&T in your portfolio. I bought it at $18 and it went up, and then it came down and I sold at $18. So I broke even, and now it's at like 16, right?
Yeah, AT&T is hard to love, man.
Yeah, it's hard to love, man. AT&T is really hard to love, and I was like, you know what? That was supposed to be like my dividend baby, but I was like, if it broke 18, I was like, if it really comes back to $18, I'm getting out. If it breaks $18, I knew it was gonna go down to like 15, 16. So I'm not touching it. Another one I sold out of and I broke even on was Intel. That one
Good
broke
for
my
you,
heart.
man. That's
Yeah,
God, dude. That
I
one's been
I see that. I
kicking
see
my
you had that
butt,
in
man.
yeah, I saw that in your portfolio as well. That's what I was going to ask you. I was like, do you still like that company? Are you still? Because I saw that you just bought some more shares, didn't you?
Yeah, I've been nibbling away at it. I picked up a little bit more in September. I think I bought 3 shares, so very slowly.
Yeah.
That's just another one of those ones, like you said with Facebook. It's gonna, they're in an interesting transition right now. They're in an interesting spot, and they have some big plans that they're working on. They're getting the ball rolling with that, and it's going to take a few years for that to play out. But you know what? Like, the way I look at it, I have a position size that I'm comfortable with now. I'll put a little bit more into it here and there. I'm not going to go super hard and heavy on Intel anymore. But I figure I'm okay. I've got maybe about $2,000 invested into it. Maybe
Okay.
2,500 if I'm actually at neutral, like no gain, no loss. Down the road, 20 years down the road, 30 years down the road, even if Intel goes to 0, it's like, okay, that's
It's not
gonna
that big of a
completely
deal.
wreck me.
Yeah.
Not going to
Yeah.
completely wreck me. And in the meantime, I'm still getting that dividend, which is awesome.
Mhm.
And I'm 29 years old, man. I've got time to wait to see how this all plays out with companies like Intel. So it's hurting me today. It's hurting a lot of people today, but I'm going to hang in there and see what happens. And I'm doing the same thing with 3M, which is another company going through some turbulence. We don't have to get into it right
No,
now.
I wanted to. I was going to ask you about that because I saw your
Okay.
video. You said, don't buy this stock, and it said 3M. And I
There should
watched
be
it.
an
I was like,
asterisk attached to that, but yeah, I basically am like, don't. Okay, there's a lot of risk going on with 3M right now. For those of you who don't know, they're going through a couple pretty big pieces of litigation. One of which has to do with some earplugs that they made for the government, and a lot of military members, a lot of veterans are coming forward and saying that the earplugs are faulty. And Mark, you can probably speak on this better than I can.
Yep.
The earplugs are faulty. They're not working, and they're resulting in hearing loss for a lot
Hearing
of
loss.
veterans.
Yep.
And that's that argument seems to be holding up pretty well in court so far. And 3M's already out a pretty substantial amount of money, and it could get worse. So that's a huge risk for that company, which is a very legendary company, a dividend king with 65 years of consecutive dividend growth. So it's historically a very stable company, but it's definitely exposed to some
Going through
litigation. The second piece of litigation they're going through is also pretty big. This one, and I think there's a couple. Which state was it? I think it was not Ohio, but it was somewhere in the Midwest. And then I also think over in Germany or somewhere in Europe. One of the products that they make, or somehow they were manufacturing stuff, and there were some hazardous chemicals, which they call forever chemicals. It was leaked into the water supply and leaked into the environment. And they call them forever chemicals because, like, once they're in there, like, they're not going to break down. They're going to be there forever. So in theory, like, that body of water or wherever it is going to be contaminated forever, which is obviously not a good thing. So 3M has definitely got its headwinds, but once again, I'm holding strong. I don't have as much invested in 3M as I do Intel, but we'll see what happens.
Yeah, it's crazy because you're right. Like 3M, Intel, and AT&T have been kind of the stable go-to for a lot of dividend investors, and all three of them are having issues. Intel was definitely one of the ones I believed in. I started buying it after, it was last year. I bought it after it had like that massive drop after the earnings or something. But then they were revamping everything. They got new leadership in, and I was really excited. I was like, okay, great. I think they're going to turn around. I obviously I never thought they were going to ever catch up again to AMD or Nvidia. I think they blew that opportunity. But I was like, they could probably be like fourth or fifth in the game at least, and make these lower cost chips or whatnot. But that last earnings was just bad, and I was like, all right, I'm out. I got out. I didn't want to take an L because again, like the Meta was kind of a lesson learned for me. I bought at 300, at 280 and 300, and then it went up to 340, and they had earnings. And I remember sitting there watching their earnings, and I didn't think it was going to be that bad. But I was literally trying to exit as the price was coming down. I was trying to sell all my shares, but it would drop literally like I would set my order and it would drop $20, drop $20, drop $40. It was so bad I couldn't even get out to the point it was like at 260 by the time the earnings call was over. And I was like, well, damn, that's $40 a share. It's like, it'll probably bounce back. It just never did. It just kept going down. So I was like, I'm just gonna hold this one. I'm not gonna sell it. I'm just gonna hold on to it. So
So with that one, are you kind of banking on? Are you kind of banking on the metaverse stuff to play out with Facebook?
yeah, I think if maybe Mark Zuckerberg, if they end up maybe replacing him, it might drop a little bit further. But I think things for the long term, I think it would be okay. I think the company will be okay. Like I
What do
said, I
you
can't
think
say
it
the
is
same for
about
Square.
him? What do you think it is about Mark Zuckerberg? Because you
I
know,
think it's the privacy, the privacy issue stuff, and the censorship stuff. Again, not trying to get too political, but I don't
yeah,
know if you know my background too much, but I worked in the Intel world, like with Snowden and all them.
I didn't
I
know
didn't
that.
know Snowden. I didn't know Snowden, but I'm just saying, like, I worked in that same
Okay.
space, but I worked with special ops and we did like RPA missions as well. Um, and there's a lot of stuff that I don't understand why people are upset with Mark Zuckerberg or Facebook about with them collecting your data because your data is always being collected,
Uh-huh.
not just by Meta. So I'm just trying to leave it at that. Um, and I think he just people feel a certain way about him. I don't think the movie helped the
Hmm.
Social Network. I think that kind of made him out to be this villain that maybe he's not. I don't know. We don't know. In the end of the day, he has a company and he's trying to make money off of it. And I think the pivot to Meta wasn't smart during the time he did it, and the amount of money they invested into the metaverse without actually physically having a working metaverse, let's just say,
Right.
I think that was stupid. And I think that's the reason why a lot of investors pulled out. It's severely undervalued now. I still think it's going to go down even further. But just to now I'm more sold on the story more than the company. Like, where are they going to go to? And I hate to say that because I actually give a lot of people shit for people who are invested like in Palantir or Tattoo Chef or all those crap companies. You're listening to the story, but what did the book say? Like, is a
Hmm.
company profitable? No, it's not. Are they planning on being profitable? No, they're not. Every deal that they make, are they making money off it? No, they're not. Why would you invest into it? So, and Meta is unfortunately one of those. We already know ads are going down, right? Ad spend, like, people are not spending as much money on ads anymore. Um, People are leaving Facebook. Most
Right.
people who are still on Facebook are probably your age and up,
Yeah, I
right?
would say up, and even people on my age, I would say, are more on Instagram, and even
Yeah,
that
that's
people are not happy with Instagram right now.
yeah, me
Um,
either. Yeah, and that's why I'm mostly active on there. So
right.
there's a lot that's going on, man. I think they just seem like as a super villain. I think maybe if he, because I don't even think is he even still the CEO? Like, he doesn't even own. I don't think he's like the head guy of Facebook anymore. Didn't he step down? I thought a couple
I'm not
of
sure.
years ago. I got to look into it again, but I know he's still the face of the company. But I don't
Yeah.
know if he's in that specific role anymore. I got to look into it. But I think he just people see him as a villain, and people just hate Facebook in general, especially when it comes to the political side of things with the censorship and everything. Even Google's going through the same thing with the censorship that they're doing. So it's going to be an interesting road. But if I had a bet on where I'm going to put most of my money, it's not going to be Facebook anymore. No, no, absolutely not. I'm just
Gotcha.
might just dollar cost average once it hits like $100 to bring down my overall cost basis. But other than that, I'm looking at other companies. I like Google. I think eventually they may go the dividend route, and I think that will really change Google.
I would love
So
that.
that's just my thesis. I mean, I don't know. There's no proof. There hasn't been any talks. I'm just saying, like, if you look for growth, like Google has, I feel like, kind of peaked at this point. So what else can you do to get investors excited? Go to dividend route. You have enough money. Why not?
Yeah.
And I think that will get people excited. So that's why I just started establishing a couple of shares in Google. But just like you said, with the way the market's going, I'm just nibbling, dude. Just like you're doing, 2 shares here, 3 shares here, 5 shares here. That's all I'm doing right now until I see a clear indication that things will turn around, because we're in too much shit that I don't know why people are so optimistic or believe that the market's going to go over 4,000 by the end of the year.
Yeah, I can't. Off the top of my head, I can't think of any reason why that would be the case. Like everything is leading to more compression in the market, which is, I mean, it's fine by me.
Yeah, because you
Yeah,
buy every month. It works out for us, right? Like for
works out,
the
man.
real investors, it works for us. It's just you have to understand your portfolio is going to be red for a
Yeah.
while.
Today, like in the short term, and that's something too. Like, you know, obviously, what's going on in the market right now is causing a huge sell-off. A lot of people are not wanting to get into the market because they see what's going on and what share prices are doing. But man, I think this is a good reminder for a lot of people. It's like, hey, this is just what's going on today. Like with this, any sort of investing, you gotta, number one, remember why you're doing it, and which for most people is retirement, which is not happening today for most people. And number two, having said that, you gotta remember what your timeline is. If you're investing for 20 years down the road, 30 years down the road, or even 10, 15 years down the road, it's like, man, you have a really good opportunity right now. The lower that share prices go, the more margin of safety that you have. The closer that the share price gets to zero and you buy into that, then man, that's just more upside potential for you as the shareholder. So it's like, man, what a time to be an investor right now.
Yeah. Is there anything that you're really eyeing right now that you're planning on buying here soon, or
Yeah.
when it hits a certain level that you? Because I'm assuming, are you also stacking cash on the side just in case as well? Are you
No,
still doing that
I'm
too?
just, I mean, I always keep some cash reserve just in my checking account or whatever. So
Mhm.
I'm ready to go if I need to. But yeah, dude, I'm happy just same amount every single week, and then depending on the week, I'll just buy different things. What's looking good, and that might change too if we see things really, really go south, then I might change that and do more of a lump sum kind of thing, or invest more aggressively. But otherwise, I'm good just dollar cost averaging. But there's two stocks in particular that I would not mind adding to my portfolio. I feel pretty comfortable with where my portfolio is at, but I would love to have Apple in my portfolio. I would love to do that. I'm an idiot, dude. When I first started investing, I actually bought Apple. I think my average cost was like 80, somewhere in the $80 per share range, and I ended up selling out of it. I don't remember what I think I sold it to buy Lockheed Martin, which actually was not a bad move. I've made a decent amount on Lockheed Martin. I think it was Lockheed Martin. But
It probably was, because I think they were at like $100 at one point and they
yeah,
skyrocketed.
and I timed that just not by any of my own talent. I timed that perfectly. But I'd love to buy Apple. I have a very similar price target as you. I'd love to buy in somewhere definitely under $130 per share, but like if it can get to $120 a share, that'd be very ideal. So that's one stock. Another stock is Target. I love Target. I'm a big Target customer, and if they get down, I think Target's just about $150 a share. Apple's just about 140, I think, if I'm not mistaken, maybe a little bit lower at this point. But yeah, if Target can get down, I don't know if it'll get to 120, but man, if it could get under 140, 130, it'd start to look pretty interesting to me. But those
Yeah.
two in particular, I don't want to go too wild and add too many positions to my portfolio, because I just don't want to have too many stocks to keep track of. But those two are definitely my top priority if I'm adding any stocks.
Yeah, I like
How about
Target.
yourself? Like, what about you, man?
So just my main one, Google
Yeah,
is the
okay,
main
you
one.
said
I
that.
want to I want to get more Berkshire. I really like Berkshire. Literally, like looking at my portfolio, I felt like I got it at a pretty good price. I'm only down 3% for the
Okay.
year on Berkshire, so that's pretty good. I don't have a whole bunch of shares or anything. I think I got maybe like 3 or 4, because they were like $277 a share or something like that. So
Yeah.
and then so Google that. I will buy an Apple again if it hits 120. Microsoft, I want to get more on Microsoft. Honestly, man, I'm trying to diversify more. I wish I had my list over here so I could tell you what I'm really
All you
eyeing
got
over here.
is Barbie. You just know Barbie
Yeah,
all
yeah,
day.
Barbie. Well, I know my daughter wants me to buy Mattel. So, and honestly, oh, you know what? I tell you, yes, Mattel. I actually like the company. I just need to get below $20. If it gets below $20, I would actually buy some shares, specifically for my daughter because she's likes Barbies and she's always like, Mattel, what company you want to buy? Barbie. She keeps saying Barbie. I'm like, so Mattel. She's like, yes, that one. So I want to buy some Mattel, and then I also really want to buy. Oh man, the same thing I just said. I think I said Target already. What was the other one? Oh, WWE.
Oh, okay.
Believe it, dude. Believe it or not, I don't. I made money off of it in the options last year, and then I just closed it up and ignored it. If you look at it now, it's beating the S&P 500. It's one of the few stocks that's literally did not decline this entire year. It resisted everything. And then I heard Vince McMahon step down due to
Yeah.
controversy, sexual
Right.
allegations and stuff. So I was like, ooh, the stock's gonna go down, and it didn't. It didn't. It actually, in fact, it went up a little
Went
bit.
up.
Yeah, it went up
Wow.
a little bit, and now it kind of went back to where he stepped down. So I would like to get WWE in the 40s. If that's going to happen, I don't know. It's close to 70s now. That's one I'm really eyeing, and I would like to get
Yeah.
into again. AMD. I started. I did. I bought a couple shares. Three or four shares at AMD at $70. That was a key level. It broke that. The next level is 55. So I'm
Okay.
going to buy at 55. I know people think I'm crazy, but that's actually where I bought AMD initially in 2020, and I sold it at 100. So, or was it? Yeah, I sold some at I think 80 and some at 100, and I want to buy again at 55. And Nvidia, I want to keep buying Nvidia. I just entered Nvidia a couple months ago at 134 is is where I bought at 134 and 130, and I think it's going to probably go down to $100.
Yeah.
So those are like the main ones I'm really eyeing. My biggest issue is like a lot of people, I was very tech heavy, and that's why like your portfolio, you're very diversified. You're looking at industrial companies, shipping companies, packaging companies. I mean, you're looking at multiple different things. I was very heavy on tech, and so I'm trying to find other companies that are in different spaces to diversify that portfolio somewhat.
Well, I'm glad you brought that up, man, because I wanted to ask you what you think about Dutch Bros.
Yes, you never heard of it.
No?
No, is that a cookie company?
No. Sorry, man. My cat was
Coffee?
being a weirdo. Yes,
Oh,
Dutch Bros is a coffee company.
okay.
They started in Oregon. I don't know how many years ago, but my girlfriend used to work for the company. But they are all over the place. Oregon, probably up in Washington, California. There are spreading, but they just went public. With maybe within the last year.
Okay.
But definitely one worth looking into. The thing about Dutch Bros is they have such a strong brand, and I'm not exaggerating. People, the employees and the people that support Dutch, they're called the Dutch. They call themselves Dutch Mafia, and I'm not even exaggerating, man. People will, and I'm sure you'll get this in the comments. Anyone who knows Dutch Bros, it's a cult. Like the people within that work there, that go there, like the Dutch Bros community, people call it a cult because it's that. Um,
They have
people are that
loyal
hooked
following.
into
Yeah,
it.
it's like Apple. They have a huge loyal following. I gotta look into it. Yeah, man, because that's another one. Starbucks is on my list.
Yeah.
That
So, and the thing with Dutch Bros though, they're all drive-through. They're all just these little huts, very small locations, so very easy to place anywhere. Um, and you're seeing Starbucks now. To your point, you're seeing Starbucks now take a very similar approach. They're adopting a lot of their stores, going from the cafes to they're building out more just drive-throughs only because they see that trend working really well with Dutch Bros. So it's one worth looking into. And I'm sorry, man, I didn't mean to cut you off a minute ago.
no. You're absolutely good. So the question is now, if Starbucks is pivoting to resemble Dutch Bros, that means that they could be in massive trouble then, right? Because I mean, Starbucks kind of has that section on lock, right? I mean,
Yeah,
Starbucks in
Starbucks
every
has that
corner.
section on lock,
So
and I mean,
how
you know
much
how
is it going
people
for?
are. Starbucks or Dutch Bros?
Dutch Bros.
I don't know. Let me pull it up right now. I know though, my girlfriend has some in her Robinhood portfolio, and she's down quite a bit. Right now, it's trading at $31 a share. Year to date, they're down about 40.5%. And then just in
Okay.
the last month, they're down another 16.25%. So they're seeing some losses for sure. But man,
Okay.
they're popping up everywhere. I've seen a lot of expansion from them, a lot of new locations since they just went public, which rightfully so. They've got the capital to do so now.
Capital. Yeah. Well, are they in Vegas now as well?
Yeah, there's a handful in Vegas. Where I lived in Sacramento, right before we moved, they were building one there, right across the street from us in my hometown, Yuba City, which is like an hour north of Sacramento, 45 minutes north. They were starting to pop up there as well. So they're definitely expanding.
Okay. Yeah, I'm definitely gonna take a look at it and put it on my watch list because if they have that, I'm gonna look into the books and see like what's their income, their liabilities, all that stuff, assets, and I'll definitely look into it. And I'm assuming they don't have no dividend or anything like that, obviously, because they're brand new.
Nah, no dividend.
So
And I'm looking at the financial statements right now, just kind of cruising through real quick. The debt level's a little bit questionable, but maybe that's okay. They don't seem to be cash flow positive in the last year, but gross profits growing, revenues growing, so they're growing on the top line at least. So that's good at least.
yeah, yeah, I'll definitely take a look at that one. Another question I had for you. I noticed you have Lowe's.
Hmm.
I didn't see Home Depot.
No,
Do you prefer Lowe's over Home Depot for a reason, or is it?
I'm trying to remember exactly why. I think I on because they're very similar companies, and truthfully, I don't think you can go wrong either way. But I'm pretty sure the reason I bought into Lowe's over Home Depot, it had something to do with the dividend stats, and I'm looking them up right now. I think it had to do with Lowe's having, yeah, okay. So it had to do. Lowe's had a little bit higher growth rate, so the growth rate on the dividends growing faster, and the dividend growth history doesn't even compare. Home Depot only has 12 years of dividend growth, and then Lowe's has 58. And I know, like,
Oh,
it's
okay.
probably not the
Yes.
best thing to base an investment on, and it's not. But there's just I guess that is one advantage that Lowe's has over Home Depot.
Hmm.
But like I said, you can't go wrong either way. And the good thing about Home Depot over Lowe's is that Home Depot, so most of Lowe's customers, the most of their sales are derived from DIY, basically people like you and me who are homeowners, right?
Hmm.
Home Depot, it's a solid mix. They've got that same group of people. About 50% of their sales are coming from DIY people like us, but the other half is coming from professionals, contractors, people doing.
Builders and stuff. Yep.
Yeah, exactly. And that's one way that Home Depot has an advantage over Lowe's. But that's starting to change. Like Lowe's, they're aware of this. They realize this, and Lowe's is making strides towards increasing sales in that department as well, trying to get more professional customers coming in instead of just DIY.
Okay, because like Home Depot was on my list as well. That's why I was asking because I noticed you have Lowe's, and the reason why I went with Home Depot was actually that the fact that you just said that they have more of the builders shopping there versus just retail shoppers, DIY people. So or
Yeah,
DIY.
and honestly, man, I don't think you can go wrong either way.
Yeah, Lowe's is
You know, when
cheaper,
you
definitely.
Yeah, that's another thing too. The valuation was
Yeah.
better. And when you think about home improvement, it's like unless you're going to go to like a local hardware store, local home improvement store, regional whatever, it's like, dude, it's only Lowe's and Home Depot. There's no one else. So,
Yeah.
you know,
You're really just
they'll be
kind
okay.
of, it's like a Walmart versus Target argument. That's
Hmm.
really what it is. It's very similar. Because early on when I invested, I got an option, long-term option, like a 2-year leap. It was between Target and Walmart, and I went with Walmart. And I told my wife, and she's like, "Why would you do Walmart over Target?" She was pissed. I was like, "Well, I was like, when people need money, when they're short in cash, they go to Walmart." She's like, "Nobody likes Walmart."
You
I
know
was
what,
like,
man? Like,
and Target outperformed though. Target outperformed. Walmart did nothing. It stayed static. My option just I got out. I took a loss on that one. Not a major one because I had it for an entire year. I had a 2-year long option, but it just moved sideways. It didn't do anything at
mhm.
all. Where Target was just like increasingly going up. And I was like, damn, my wife was right. I should have went with
Yeah,
Target.
and you saw what happened with Target just like a few months ago, though,
Yeah,
right?
it just completely crashed. So,
Hmm.
because of the forecast and stuff. So, yeah, that's why I think I'm going to end up buying shares in Target as well to try to diversify. And then, like I said, either probably Home Depot, maybe Lowe's. I look a little bit further into it, and I'm definitely gonna look at the Dutch Bros. So, I definitely Definitely appreciate that, Jim. So what's the plan, man, with your channel? So moving forward, you say, yeah. So right now, technically, you're a full-time content creator, right? This is what you do,
Technically.
and you love it and you enjoy it. What's your plans moving forward? Are you going to continue to do what you're doing, or do you have plans to change your content up a little bit?
Yeah, I mean, oh, man, that's such a good question. And, I'm just going to keep on keeping on for now. I'm really just trying to take it one step at a time. With each video or, with each new thing I put out, I'm really trying to just improve as a creator and put out better videos that people want to watch longer. And I'm really trying to work on establishing my skill set as a YouTuber, I guess, coming up with better video topics, making better thumbnails, trying to increase my watch retention, get people watching my videos longer, all these things that can help lead to a more successful channel. And I guess really when you get to the root of it, that's my main goal. I want to do this better. I want to do it more. I'd love to be making more money from it. It's not 100% about the money, obviously, but being able to do it full time allows me to do it better and make more of an impact, which is, like I explained earlier, man, it's just been such a rewarding thing. So that's my main focus, man. It's just trying to be the best, put out the best videos I can, and teach people about this stuff the best way I know how, while at the same time developing my skill set as an investor, because making these videos forces me to learn more about this stuff, and it definitely keeps me honest and keeps me wanting to learn more so I can share more. And so, I'm just trying to keep doing all of those things. And in this next month, or in October, this is the first time I've said this. It's not a big deal. I'm not trying to keep it under wraps or anything, but I've actually been working on building a website off of YouTube where I can start building out, start doing some emails. I want to do like a free weekly newsletter where I can talk about maybe more what's going on in my portfolio, or share other like things that I've watched or listened to that I found helpful, really good videos, podcasts, books I'm reading, other tidbits about investing that might help other investors out there. That's kind of my next thing that I'll do in addition to YouTube, and I'll be officially launching that sometime this month. I don't know exactly when, but these next few days, I on the tail end of getting it completed or getting everything finalized. These next couple days, I really want to spend some time doing that. But that's kind of the next frontier. And, all this stuff is a lot of work, and I'm just trying to take it one step at a time. But man, it's so much fun, and it's such a rewarding thing to do. So I just look forward to hopefully being able to do it for a long period of time.
Yeah. Have you ever come across like the burnout factor yet?
No, because I have a good routine with it. So, and I think this is important to have. Just in my own life, I'm very routine. My days look the same. I'm very scheduled and structured. And I treat YouTube the same way. I know that, okay, Monday and Tuesdays I don't have to do as much on YouTube, but starting Wednesday I got to script a video. Thursday, I got to script another video. Friday, I'm shooting both videos. Saturday, I'm editing at least one video. If I don't edit two, then Sunday, I have to edit the second one. So I got to edit a video today. And that's kind of what it looks like for me. Just having that structure is really helped me avoid burnout. And also, I allow myself time away from it too, like Monday and Tuesday. I don't really do much YouTube stuff. I might respond to comments and watch YouTube, but I'm not working on anything. And I think having that break has helped me as well. So. Does that make sense?
Okay, that's awesome, because I hit that burnout factor right before the summer. That's why I took a 2-month break, and that's how I came across your channel, because I was trying to pivot my channel and change it up, and that's what I did. I ended up changing it all up. I came up with some bunch of different ideas, but I was going through the YouTube rabbit hole, and that's how I came across you and a bunch of other YouTubers that ended up reaching out to. And it's very interesting space there in the financial literacy space once you get away from the cult that I was part of. I was like part of this financial literacy cult. I was like this little bubble. And once I escaped, I'm like, oh, there's so much other stuff out there. And there's so many content creators, especially in Vegas, where you live at. You said Andre Jick, he lives in Vegas. Graham Steffens. I know some people that I rock with, they hate those guys. I like their content. So I like Andre Jick. I think his production value is amazing. The way he delivers the information. But like you said, same thing. I started watching him early on when he was doing the dividend stuff, and then he started shilling all these crypto stuff. Wasn't a fan of that. And now he kind of just does like the news, the same stuff that Graham Stephan does. But you're in a space where I've noticed like a lot of people, man, a lot of people who are on YouTube live in Vegas now. Hodge twins, I don't know if you know who they are, the
Oh
conservative.
yeah, they live in Vegas.
Yeah, yeah, they live in Vegas, man.
Oh, I
They
didn't
live
know
in
that.
Vegas. So
Dude, I used to
yeah,
watch those guys because outside of this, I'm super into fitness and lifting and stuff. And I remember when I first was getting into that over a decade ago, over
yeah,
10 years ago, those were some of the first guys I watched. I love those
yep.
guys.
They used to just talk shit and lift weights. Yeah, it was
They
funny, but
do. And they still do at least half of that, right?
yeah, yeah, yeah. They still, I mean, they shifted that, definitely shifted their content, but yeah, they live out
Yeah.
there. And in Florida, we have some content creators. Nobody seems to be in Orlando though, where I'm at. So it seems like everyone's in Miami area.
Well,
So
you got an
like,
untapped market there, man. There you go.
yeah, yeah, it is. Like Valuetainment. You watch that?
Mm-hmm.
Yeah.
PBD.
So yeah, he's in Miami, I think. So wish me luck, man. I reached out to him. I want to interview him. I don't know if he's going to get interviewed by a small channel like mine, but you never
Yeah,
know,
you
man.
never know,
Hey,
man.
I shoot my shot. I reached out to you and you said yes, so it worked out.
Well, dude,
Um,
I'm happy to do this anytime. I really appreciate you thinking of me and wanting to have me on. It's been really fun being able to chat with you. And like I said, I'm always down to do this stuff. I love talking about this stuff. So,
yeah,
and
yeah.
it's kind of a lonely journey being an investor. I don't know any people in my real life that are into this stuff. So it's fun being able to do this.
Yes, yes, it's definitely hard. Like my wife, she has no desire. Like she sits there and she listens to me. She's like, I don't know what you're talking about, but I
Yeah,
was like, you're not interested, are you? She's like, Do you want me to be honest? She's like, no, I'm not. But I love
good
how
stuff,
passionate you
Mark.
are
Keep
about it.
keep it
Yeah,
up.
I know. And at least when I go to my job, because I got offered a job a couple months ago, last year December, and I took it after retiring. And those guys there, like when I come in, me and this one guy, we talk all day stocks. It's pretty much
Mhm.
all we do. He loves that shit. He's happy that he has someone else there to talk to. So it's
Yeah.
definitely been great. And it's also great doing this YouTube channel because I get to meet people like you, and I interview a lot of people. And it's you're one of the few people who has their own YouTube channel as well. So that's why I'm trying to bring more people on who are in the same space as I am, like we
Yeah.
are, and get people exposed to different audiences and stuff. So that's my ultimate goal. I enjoy this, and I want my channel to be positive. So that's also the reason why I'm pivoted a little bit because I don't want it to have like this negative conversations about always these scammers taking advantage of people. So that's not what I want my channel to be. But I'm also very transparent. If I have questions, I ask them. Like you have a Discord group, right? But it's free, correct?
Hmm. Yeah, I do.
So do you advertise that at all?
Yeah, I'll mention it in videos here and there. I include the link to it in the description of all my videos.
Okay.
Pretty much every Friday when I do the live streams, that's when I'll mention the Discord. And I have affiliate links and stuff too. But I'm really trying hard not to shove that down people's throats. I'll start doing sponsorships here soon too. But I just don't want to shove
Mhm.
everything down people's throats. They'll find the Discord. They'll go look in the description. They'll go see it. I'll mention it here and there. And once I start doing the newsletter, I can promote it a little more there as well, and
Yeah.
that's good enough for me. Like one way or another, people are going to find this stuff, and it's growing slowly but surely. The Discord and the channel and all these things, and so just got to keep on going as I've been, and it'll work out.
Yeah, and you're a coffee guy too, right?
I'm a coffee guy and I'm a tequila guy.
Okay. Are you thinking about maybe selling your own merch when it comes to like
Yeah,
coffees
I'd love
or?
to do. I'd love to do merch at some point, like T-shirts and probably I don't know some stuff like that to start with. But yeah, I've got some fun ideas up here, but it's just like one thing at a time, man. I want to. YouTube channel is going pretty good. Okay, I feel good. I can expand into doing a newsletter. I don't know what's going to come after that, but I'm just trying to take it one thing at a time.
Yeah. Now, man, I could definitely see you blowing up, man, soon. So even further than where you're at, because you're at about 10,000. Let me throw your link up here real quick so people can find you. Everybody, Ryne Williams, you're around 10,000. How long did it take you to get 10K?
It took me. Let's see. I think I hit 10,000 subscribers in July or August, so it took me about 21, 22 months.
Okay.
Hmm.
Yeah, that's awesome, man. I'm hoping to get there soon too. Is there any specific videos on here that you recommend people start off with first?
Um, so if you go to the home page, or not the home on YouTube, but the home on my channel there's a playlist that is like new to the channel. Watch these first. I would check all of those out. It's got a few things like what's recently been going on in my portfolio, so you can get a taste of what I'm all about. It's got some other helpful videos on like some of the best tools to use for investors that are free, as well as maybe some tips and tricks on how to be a better investor. But I think that's a pretty good place to start. Yeah, I don't know.
Right.
Hopefully that answers it. I don't know. I don't know if there really is a good place to start. Just watch them all. See what you like.
Yeah, so there you go. Well, everybody, make sure you follow this guy. I'm telling you, if you're interested in dividend, this is the guy to watch. His content is on point. The editing is on point. Everything. You get straight to the point too. My stuff is always very long-winded, so I'm trying to condense my stuff. It's hard, but your stuff is definitely great. I
That's
enjoy
something
it.
I've learned the hard way, man. Believe me.
Really? It's like why is that? How like?
Well, you just how deep are you in your analytics? Do you look at your analytics a lot?
I do. Surprisingly, actually, my retention is pretty good.
Okay.
Which I noticed. Because I know initially someone gave me advice, hey, do shorter videos. The shorter, the better. But I know my trading group reviews did very well. They were always long formatted. And then like just my regular vlogs when I come and talk, I seem to keep people's attention at least for a good 10 to 15 minutes.
That's great.
And then they fall off.
Yeah, that's the same to me on my lives. But I've just worked on trying to, and I kind of touched on this a few minutes ago, but I've just really worked on trying to increase the retention in my videos. And in doing so, you got to look at the retention graph, which for those of you who don't know, it's one of the data points that YouTube gives you. Is super helpful. And you can very clearly see like where people are dropping off, and you have to analyze a little bit and see what am I saying or what am I talking about here that people don't seem to be interested in. And I know for me, like it used to be, I'd start off my videos, hey guys, it's me, Ryne. Like today we're going to be talking about this. But before we get into any of that, you got to like, you got to subscribe. And also I want you to leave me a comment below and tell me how your day's going. And my day's going pretty good. I had some coffee. So, I just would start off the first minute and a half to 2 minutes. It's just, not what the audience came to see. And so it's
you get
kind
straight
of a hard
into
thing.
it.
Yeah. So you just get straight into it, All right, guys, my portfolio sunk like a rock in September, and we're going to talk about it. Starting with the performance, here we go. And then, you get into the content 20, 30 seconds into it versus a minute to 2 minutes into it. Just, save the audience time, man. That's so easy for them to click off and go watch other things. So, yeah, the retention graph's been huge.
Oh, okay. Yeah, maybe I'm because I definitely need to stop doing that too. I talk too much in the beginning before I get into the videos. But yeah, man. Well, listen, Ryne, I kept you way longer than expected, I'm sure. Thank you so much for coming on my show. I really appreciate it. Tell everyone where they can find you on social.
You guys can find me on YouTube if you just search Ryne, RYNE. You'll see me pop up. I'm one of the first ones in the suggested that'll show up there. But my last name's Williams, so search Ryne Williams. You can find me there. If you search dividend investing, dividend stocks, dividend income, those kind of things, I'll probably pop up somewhere along the way. If you're on Instagram, it's my name, Ryne Williams. You can follow me there. Not much going on over there. I just kind of show you pictures of my cat and stuff. But, you can follow me there if you're into that stuff. But, yeah, that's pretty much the only two places where I'm at.
All right, perfect. Well, once again, thank you so much. I appreciate it. Everybody else, you guys are watching Trading with a Dummy. I see you guys in the next podcast. Peace out.